Now, Simon, we talk a lot about statistics, and of course, we do our best to make sure that how we're reporting them is not only accurate, but also to make sure we explain it in a way
that makes sense.
That makes sense.
Yeah.
So we're very fortunate to have a great gentleman here, and that's George Carras from RealNet, and that's the Real Estate Information Services Canada. So, George, welcome to the show.
Thank you very much for having me.
Now, tell us more about what you do, your company.
Well, RealNet's the Bloomberg, if you will, of the property markets in Canada. We have offices across the country, and we track both the commercial real estate markets, the land markets, and the new housing markets, both ground-oriented housing and also condominiums.
All right. So why is RealNet important to the industry?
Better information. I think if you think about it, smart people that are well-informed make better decisions. Better decisions made consistently over time create better markets.
Well said.
And I think that's where, Canada is as a whole, and that's our role is better information.
So knowledge is power.
It's better decisions.
Yeah, I mean, we constantly looking at the information that RealNet's putting out. But one of the questions I have is, I'm assuming the big focus of the research that you do and the numbers that you publish are relating to the new construction industry, but you have to be looking at what's going on in the resale markets to understand the context of it, yes?
They're all connected, Simon, absolutely. And I think, when you think about the resale market itself, every one of the homes that exist today was at one point in time a new home, a condo. So the interconnectedness of the property markets is increasing, and it's not just the resale and new home market, but also the commercial market, the land market, and particularly around intensification. It is creating an increasing complexity and interdependence, and it's also creating a bit of an extremity condition in the property markets themselves around price and size and choices.
So how does RealNet benefit both the realtor as well as the consumer?
Again, it's better decisions. So we have a service that applies across the entire spectrum of stakeholders, whether they be realtors, builders, lenders, governments, regulators. We power about 45,000 professionals across Canada, and each one of them have a very important role in the industry and marketplace. And a better decision by them is a better marketplace, and our job is to constantly create better information and tools for them to make better decisions.
All right, so I'm going to put you in the hot seat here. Let's talk about 2013.
Okay.
Why don't you give us an overview as to what we experienced?
Well, on the new home market, again, this is new housing, ground-oriented and condos. It was the second lowest level of sales this region has seen, the GTA, in the last decade. Second only to 2008. And one of the main drivers of that was supply. You can't sell what you don't have.
Very true.
You shouldn't sell what you don't have. You get in a lot of trouble if you do that.
Yeah. See, one of my questions is when you say that it was one of the worst years in record. I think a lot of people can hear that as a real negative, like, oh no, what's happening to the housing market? Maybe I shouldn't be buying. When it's actually the opposite, isn't it?
Well, it's a supply. Like this goes to the point of why. So why is a really good question. Real thinking starts when you ask the question why, but you better take time to look at all the different components. So when you look at sales, again, you can't sell what you don't have. And on the supply side, on low-rise housing, and that's ground-oriented, so that's detached homes, semis, towns, links. What was once the traditional form of housing growth in this region is dwindled down to a near record low level of choices. Consumers can't buy what doesn't exist in builder sales centers. And then you think about that and go, well, how did it get into the builder sales center? Well, it went through an approval process and a development process, and all of that comes back to a condition or policy that was put in place, really not well-known set of policies that came from the provincial government in 2005, 2006, and that's Places to Grow Act, the Green Belt,
right.
And all those put in motion a series of events that really were designed for the region to grow up and not out. So where once there was an abundance of low-rise ground-oriented housing, there's now a lot of scarcity. The inverse of that and the growth is in high density. That's the plan. So the lack of supply last year, in part on the low-rise, was structural. There's just not much more of that coming, and that's the way of the future. And on the high-rise side, it was really one of builder discipline. 2013 was a very good year where builders held back on new launches, and those that were launched actually did fairly well. So the lack of launches really were the driver for the decline in the sales.
So it doesn't mean that it's an unhealthy market. It's just a supply factor.
Well, I think you see absolutely the sales are really driven by supply. You can't sell what you don't have. And on the high-rise side, the launches are typically where you'll see most of the sales of a high-rise project take place, is on the launch. So fewer launches, fewer sales.
And also, I mean, a lot of people have that skepticism when they see all those cranes out there and they think, how is it possible? And they look at that as a sign of doom and gloom, or people purporting that. So maybe you can explain and give us your take on that.
Well, I think it's perspective. Again, I think it's, I mean, for the average person, it's really hard to miss a 40-story building that's being constructed, and especially given that it takes 3, 4, 5 years to build. What's easy to miss for the average person is the declining number of once robust low-rise subdivisions, which once dotted the 905. It's very hard, unless you do what we do, which is drive to all of them every month and count all the number of units. And for us, it's real easy, and for all of our clients, it's real easy. But for the average person, it's very hard to see that. So what you see in front of you determines your opinion. And in fact, this year, we're at a record level of units under construction. There's almost 64,000 units in the GTA that are under construction.
But the question that we get around that, George, is who's going to buy all these condos? And I think it's the wrong question, and you know what I mean. It's who bought them. Well,
that's right. And I think that's, and in fairness, a lot of times when people from outside, particularly in the U.S., and look at the housing market, they don't appreciate the process in which housing is created. So you're right, Simon. 87% of the units that are now under construction are sold, and that's with a binding agreement, a purchase and sale, and deposits,
and a good number of them end users.
Well, and you see what you have are commitments, and the challenging thing around the growth in housing for from now till really forever is it's all grow up and not out. And the way we have de-risked, the industry has de-risked the development, it's through pre-sales. So pre-sales happen. That provides enough security for lenders to lend on those projects, and then builders begin construction. And then years later, people take delivery of those units. And I think that also brings in the complexity brings in some risks, because you kind of buy in one environment, you build in another, and you close in yet another. So it's a lot more complicated going forward than it was in the past.
All right. Well, there's definitely a tale of two markets going on with regard to the high rise versus the low rise. So maybe you can educate us on that price gap that continues to widen. Shed light on that.
And this one's going to be like watching your dog run away on the prairies. This is going to keep going and going and going.
Yeah.
And this is the price gap separating the two different forms of housing. So ground oriented housing and high rise housing in the past averaged about $75,000. And when one moved up, the other one kind of moved up with it in that sort of same lockstep manner. Since 2011, the gap has been growing. The gap now is in the order of $220,000, almost 3 times that.
When we talk about the gap, we're talking about the average price, correct?
Index price, yeah. So
the index price.
Yeah. So
But here's my challenge with the gap, and maybe we need to adjust for it. And by that I mean, when we look at the average condo, it's literally half the size of the average house.
Not quite, but close. Yeah,
pretty close.
Yeah. No, you know what? And that's so a little formula that I might want to just share here. Outcome equals event plus response. So your point on the reduction in size is a very important one, and that was a response. So the GTA new condo has lost the equivalent of 120 square feet, or a 10 by 12 room, which is missing from a 2013, 2012 condo that was once there in 2009. So I think that like your size point on shrinking condos is a very important one.
Well, they're adapting to the market requirements.
And one of the
and
things,
the pricing.
Well, and the reason for that was the change in the cost regime that was put in place in 2009 with the introduction of HST. And as a result of that, there was a net new cost that was introduced into the development cost of a new condo.
That seems to be the theme of the last couple of years: is increasing costs.
It's a challenge,
with the municipality and the province, and it just goes on and on and on.
I think that's one that everyone has to be extremely mindful of, because where does that money? Where's it go? At the end of the day, it's baked into the
comes out of the buyer's pocket.
The home price.
The buyer's writing the check.
Yeah.
If there's any confusion,
that's right. Let there be none, please.
Okay.
And I think that the size impact was builders trying to find efficiencies, and efficiencies measured in square feet. More efficient units, sizes, configurations, in order to maintain that end price. But you get less space as a result of that.
Yeah.
So let's talk about 2014. What are your thoughts?
Well, I think you're going to continue to see the same framework around intensification. Grow up, not out, is going to continue in 2014. And I think if you look even further than that, I mean, the growth plan to 2036 is calling for 2.5 million more people to move to the GTA. They're going to need a place to live. That's Vancouver, by the way.
So the entire city of Vancouver moving here
by 2036. Yeah. The plan is grow up, not out. So I think what you're seeing in 2013, 2014 is the end of the beginning. What you're seeing here is the implementation of intensification. This is intensification in action.
This is the new norm.
This is what you'll see going forward is more high-rise housing, and the condition on price extremity will likely continue. I mean, if you look at the gap that we said in Toronto is $220,000, that same gap, if you measured it in Vancouver, is probably closer to $800,000 or $900,000.
Unbelievable. And Brian, talking when we had him on last time, he was indicating that we're probably about 10 to 15 years behind Vancouver. And that is the norm in so many cities. It's just for us, it's we see all this land and we just don't understand.
Well, I think that's the challenge for many people who look at Canada. We have the second largest land area in the planet. We have 36 million people. What's the problem?
Well, we were landlocked. I mean, they literally created a real estate island with the lake on the south and the greenbelt to the north, and that's it. Right?
That's right.
And a whole bunch of policies around it. Let's be real. Now, George, you have a column from the Toronto Star from January 30th. Tell us more about that. What was it all about?
Well, I think I have the privilege of writing a monthly column in the New and Home section, and this one I think was just trying to put the events of now in the broader context, and the reason why we have so many housing condo units under construction is because 2 years ago we had a lot of sales, and you say, well, why did we have so many sales of condos in 2011? Well, because back 5 years before that there was the planning principles that were put in place for changing the supply. So if you look at today, it's not only about what's happening today or last year, it's about understanding the series of events which honestly are very complicated and involve many levels of government, but they started a decade ago. So I think it's trying to give today some accurate context to the past and perhaps some suggestion as to where we might be headed going forward.
So we can all make very wise, informed decisions going forward.
That's hopefully the
But it's also important, I mean, in a sense, at the risk of insulting some of our listeners, to dumb it down and say, look, it's really simple. People are buying condos to live in it, and others are buying condos to invest in them because we have a huge shortage in rental stock, and people keep coming. They keep coming to the city. In fact, what is it? 250,000 a year come to Canada, and 100,000 of them come to the GTA. And a third of them are going to buy within the first 2 years, and the other 2/3 are going to rent. So all of these condo investors are filling a need. And when we say there's a shortage of $1,700 one-bedroom condos downtown, people in the burbs don't get it. But people want to live here. They're working here. They want to live. They'll pay what they have to pay.
Absolutely.
And there's a need because there's no rental inventory.
And I think and as a way to create that. the other thing that's emerging is purpose-built rental. You're seeing on the institutional investor side, the math starting to pencil to just have the return of more purpose-built rental buildings.
Well, cap rates have gone in that direction to justify it now.
And you can see that now emerging. I think the one interesting thing to me is where your point of the condo investor has played an incredible role in the creation of that housing form. But that housing form has legal title for ownership. So fulfilling that growth through condominium provides for the downstream ability for ownership. Mm-hmm. And that's an important thing, I think, for the broader community, because if you had the next 2.5 million people be, have no means of ownership, well, then that creates some conditions in the wealth of the citizens that is potentially challenging. So condo as a way to fulfill that growth is a very interesting form of development.
Mm-hmm. Now, before we wrap up, George, I just want to get your take. We have a lot of listeners, of course, that are north and cottage country and everywhere in between and around GTA. Can you touch upon the fact that, for a lot of people, it's their gain. What's happening here in the GTA, what people don't realize is a lot of people decide, okay, guess what? You know what? I'm going to move further north. I'm going to find that other opportunity, get the home that I want, and off they go. I mean, places like Barrie, they've seen incredible growth. Yeah. And of course, they're getting amazing results in terms of they just have no supply. I mean, people put their houses up for sale and they're gone. Multiple offers in Barrie.
I think you're seeing. So I think now, again, you're right. It's a more perspective, and the GGH, as it's referred to, or the Greater Golden Horseshoe, which covers Niagara, mm-hmm. Loops around to KW, up over Simcoe, and then over to Peterborough, is now the new region. In fact, we're actually expanding our coverage to assist better decisions through that. But you'll see that as the beneficiary, particularly around ground-oriented housing. So if you're in the GTA and you wanted the once traditional 46-foot lot, there's only 31 of those lots left in the GTA. Wow. And the average price is $930,000. So you have to start, and if you want that, it's drive till you qualify.
I love that.
Yeah. You're so going to take that one, aren't you, Simon?
Oh, absolutely, yeah.
But your trade-off now, look at the trade-offs that you're faced with. Your trade-offs are space. So you can still have that same price, but you're living in smaller space in condos. Or you want the space, well, now your trade-off is time. Right. What's your time worth to you?
No, but now you're living in 6x6 car for 2 hours each way.
What, Simon,
right?
you're right, because I think when you look at it in the broader scheme of things, productivity in the region, like we've got great people that live in this region, and they can be very productive, and keeping them in whatever form of transportation for lengthy periods of time isn't exactly the best productivity.
Highest and best use of time. I know, absolutely. Now, we're definitely going to have you on again. But for people that want to know more, how can they reach out to RealNet? How can they find out about what you write? Where can they go? For most people, it's talk to a realtor. We actually power the Toronto Real Estate Board with a unique service. And they're equipped to help all of the clients make better decisions. If you want to learn more about us, www.realnet.ca is our website, and we welcome any input.
George, always a pleasure talking to you and great having you on the show.
Thanks very much for having me.
Thrilled to have you.